The debate between Bitcoin BTC and Ethereum, the superior investment, has captivated crypto enthusiasts and investors alike for years. Both are dominant players in the cryptocurrency space, yet they serve different purposes and have unique characteristics. Let's dive deeper into their core differences and analyze which one might be the better investment for you. 1. Overview of Bitcoin and Ethereum. Bitcoin BTC. Bitcoin, the first cryptocurrency, was launched in 2009 by an anonymous individual or group known as Satoshi Nakamoto. Its primary purpose is to function as a decentralized digital currency, allowing peer-to-peer transactions without intermediaries such as banks or governments. Total supply: 21 million coins, making it scarce and deflationary. Primary use case: store of value, often referred to as digital gold. Consensus mechanism: proof of work power, which secures the network through mining. Ethereum, launched in 2015 by Vitalik Buterin, takes blockchain technology a step further. While Bitcoin focuses on digital payments, Ethereum is designed as a decentralized platform for smart contracts and decentralized applications (dApps). Total supply: no fixed limit, but annual issuance is controlled. Primary use case: powering smart contracts and decentralized applications (dApps). Consensus mechanism: transitioning from proof of work power to proof of stake powers with Ethereum 2.0, which makes the network more energy efficient. 2. Investment potential. Bitcoin versus Ethereum. Bitcoin as an investment. Pros. First mover advantage. Bitcoin is the most well-known and widely accepted cryptocurrency. Store of value. Often compared to gold, Bitcoin is favored by institutional investors and long-term holders as a hedge against inflation. Scarcity. With a limited supply of 21 million coins, Bitcoin is inherently deflationary, driving its long-term value proposition. Cons. Limited utility. Bitcoin's primary function is as a currency or store of value. It lacks the flexible applications of Ethereum. Energy consumption. The proof-of-work mechanism requires massive energy use, raising concerns about Bitcoin's sustainability. Ethereum as an investment. Pros. Smart contract capability. Ethereum has created an ecosystem where developers can build decentralized apps (dApps) and launch other tokens, ERC-20 tokens, DeFi and NFTs. Ethereum as the backbone of decentralized finance DeFi and non-fungible tokens, NFTs, to rapidly growing sectors in the crypto world. Upgrade to Ethereum 2.0. The transition to proof-of-stake powers aims to make the network more scalable and energy efficient, potentially increasing its adoption and value. Cons. Competition. While Ethereum is dominant, other platforms like Solana, Cardano, and Polkadot offer similar smart contract functionalities with varying degrees of efficiency and lower fees. Supply concerns. Unlike Bitcoin, Ethereum does not have a hard cap on its total supply, which could affect long-term scarcity and value. 3. Performance and historical returns. Bitcoin. Historically, Bitcoin has proven to be a reliable store of value with remarkable price appreciation. From just a few cents in its early days to an all-time high of over $69,000 in 2021, Bitcoin has experienced exponential growth. However, it has also seen significant volatility, with price corrections as large as 80% in previous market cycles. Ethereum has also seen explosive growth since its launch. Priced at less than $1 in 2015, it reached an all-time high of over $4,800 in 2021. Ethereum's diverse utility in DeFi, NFTs, and smart contracts adds another layer of value, but it also subjects ETH to more speculative risks. 4. Risk factors. Bitcoin primarily faces risks related to regulatory crackdowns, competition from other currencies like central bank digital currencies, and its environmental impact due to energy-intensive mining. Ethereum faces additional risks beyond regulation, such as delays in the Ethereum 2.0 upgrade, competition from faster and cheaper blockchain platforms, and scalability issues that could hinder mass adoption. 5. Which one is the better investment? The decision between Bitcoin and Ethereum, an investment, ultimately depends on your investment strategy and risk tolerance. Choose Bitcoin if you want a store of value that has gained institutional support. You believe in the digital gold narrative and prefer a less volatile option in the crypto space. You are looking for a more straightforward, long-term investment. Choose Ethereum if you are interested in the rapidly growing DeFi, NFTs, and smart contract ecosystems. You believe Ethereum 2.0 and future upgrades will increase scalability and adoption. You are open to a more speculative investment with higher upside potential, but also higher risks. Conclusion: both Bitcoin and Ethereum have proven to be revolutionary technologies and valuable investments. Bitcoin shines as a store of value and hedge against traditional financial systems, while Ethereum offers broader utility with its smart contract platform and thriving DApp ecosystem. The better investment depends on whether you prioritize stability and long-term growth Bitcoin, or are willing to embrace innovation and risk for potentially higher rewards Ethereum. Many investors find value in holding both as part of a diversified crypto portfolio.